China's economic strategy, support and competition control. In a bold declaration, China's leadership has committed to bolstering an economy that is currently grappling with numerous risks, while also addressing what they term as disorderly competition among businesses. This initiative includes implementing capacity reductions in critical industries during the latter half of the year. According to the state-run news agency Xinhua, the leaders have indicated their intention to curb price wars among manufacturers. This comes amid rising speculation that Beijing is poised to initiate a new phase of factory capacity reductions as part of a long-awaited and challenging strategy to combat deflation. The summary from a recent meeting of the Politburo, the highest decision-making body of the ruling Communist Party, outlines the economic direction for the remainder of the year. It emphasizes a steady policy approach characterized by flexibility and foresight, aimed at stabilizing employment, businesses, market conditions, and public expectations. Analysts suggest that there may be less urgency for policymakers to roll out new stimulus measures, given that recent economic data has exceeded expectations and a continued truce in tariffs with the United States allows for a greater focus on supply-side strategies to address overcapacity and deflation. Gary Ng, a senior economist at Natixis, noted, "There is a stronger emphasis on recognizing potential risks from demand-supply imbalance." He added that while the government is more inclined to take action against deflationary pressures and overcapacity in manufacturing, the current stress levels have not compelled them to commit to immediate stimulus, keeping options open for future needs. In a separate statement, President Xi Jinping highlighted the necessity for China to effectively enhance consumption and break free from the cycle of involution. This term is commonly used in China to describe a scenario where fierce competition among companies leads to diminishing returns and even losses. The summary also revealed that China will continue to adopt a more proactive fiscal policy alongside an appropriately loose monetary policy. However, unlike discussions in April, there was no mention of potential interest rate cuts or adjustments to the reserve requirement ratio. The leadership has called for the implementation of structural monetary policy tools to provide robust support for technological innovation, stimulate consumption, assist small enterprises, and stabilize foreign trade. Despite the world's second-largest economy experiencing a growth rate of 5.2% in the second quarter, slightly surpassing expectations, analysts warn that weak domestic demand and escalating global trade risks may necessitate further stimulus measures. China aims for an economic growth target of approximately 5% for 2025. Larry Hu, chief China economist at Macquarie, remarked policymakers are currently in a wait-and-see mode, but they will act if the growth target is threatened. The upcoming 15th five-year period, 2026 to 2030, is deemed critical for China to achieve economic modernization, as the country faces profound and complex changes in its development environment. The leadership is set to convene a fourth plenum in October, where discussions regarding the new five-year plan are anticipated. Meanwhile, the economy continues to confront persistent deflationary pressures, with producer prices declining for the 33rd consecutive month in June. A prolonged downturn in the property sector is also impacting the economy, despite existing policy support. Analysts predict that the effects of a consumer goods trade-in scheme will diminish in the coming months. Xinhua quoted the Politburo stating, "At present, China's economic performance still faces many risks and challenges." The economy has benefited from a surge in exports as businesses rush to take advantage of a tariff truce between Beijing and Washington. The two nations have agreed to seek an extension of their 90-day tariff truce following constructive discussions aimed at easing an escalating trade conflict. China is determined to unlock the potential of domestic demand and implement measures to enhance consumption. The summary indicated that the issuance and utilization of government bonds would be expedited for more efficient use. Additionally, the country will promote technological innovation and accelerate the growth of emerging industries that can compete globally, while also regulating disorderly competition. The summary concluded with a call for the governance of disorderly competition among enterprises in accordance with laws and regulations, and emphasized the need for improved capacity management in key industries. Some analysts argue that stimulating consumer demand is essential for effectively combating deflation. What are your thoughts on China's approach to managing its economy? Do you believe that the measures being taken will be sufficient to address the challenges ahead? Share your opinions in the comments. China Politburo's decision. No new stimulus measures. In a surprising turn of events, Chinese leaders have decided to hold off on implementing any additional significant stimulus measures for the time being. This decision comes as they shift their focus towards tackling the issue of excess capacity within the economy, a move that could have far-reaching implications for growth. Rather than unveiling new policies aimed at stimulating economic activity, the Politburo, which is the highest decision-making body of the ruling Communist Party, has committed to enhancing the effectiveness of existing policies. This announcement was made public on Wednesday through a report by the state-run Xinhua news agency, indicating a strategic pivot in their economic approach. But here's where it gets controversial. Many analysts and economists are debating whether this strategy will be sufficient to sustain growth in the face of ongoing economic challenges. Some argue that without fresh stimulus, the economy may struggle to regain momentum, while others believe that focusing on the efficient implementation of current policies could yield better long-term results. What do you think? Is the decision to refrain from further stimulus a wise move, or could it lead to stagnation? We invite you to share your thoughts in the comments below.